Good afternoon from Los Angeles and happy Friday. This is Stock Market Today. And on today's show, we're going to be taking a look at the charts of VipShop, ServiceNow, and a bond play. But before we get to that, we're going to take a look at the major indexes. It's Alyssa Quorum. I'm joined by Ken Shreve. And Ken, what a wild week it's been. We did see the major indexes come well off of their lows for the day, but still closing down substantially. The Nasdaq finishing with a loss of about 1.9% after falling as much as 3.9% earlier in the session. So what do you make of the wild action we've seen this week?
You know, every time we sit in these seats about 10 minutes before the close, we're wondering what the heck's going to happen in the final 10 minutes of trading. But so we once again saw some buying late. You mentioned the percentage declines that the indexes eventually ended with today. But it was exactly 1 week ago the Nasdaq reversed sharply higher on last Friday off its 200-day moving average. The Nasdaq, as you can see on the daily chart here, is once again probing support at the 200-day line. It looks like it's going to close well off lows, but listen, we're still in a correction. There's a lot of technical damage that's probably going to take some time to repair here, and another furious round of buying in bonds that sent the 10-year Treasury yield lower by 16 basis points to 0.75%. So the bond market is still very fearful of an economic slowdown, and the stock market is too. Yeah,
that's right. The 200-day line seems to be a very key area. Like you mentioned, still holding support there. But do you feel like that is now the line in the sand there, as well as the low from the day that we did see that upside reversal off of the 200-day?
Yeah, so last Friday, the Nasdaq found support at the 200-day. That actually turned out to be the first day of a rally attempt. So, and you can see that initial support 1 week ago at the 200-day line. So the fact that the Nasdaq is still holding above the February 28th intraday low means the rally attempt is still intact. But again, there's just a lot of leading growth stocks that have really been hit hard. A lot of them look like they're ready to form new bases, and the base building period, it usually takes several weeks to occur. So we're going to keep an eye out for signs of a confirmed uptrend. We'll keep an eye out for a follow-through day. We could get one. But we're still in a correction for now, and we'll see what next week holds.
Yes, that we will. And a lot of leading growth stocks are getting hit hard, but one that is not is VipShop out of China. We saw a breakout for that name on Thursday, a big gain on the quarterly earnings report with triple-digit earnings growth, closing that day up some 27%, Ken. And it was able to hold the gains today, falling less than 1%. So holding up nicely, as we like to see with these earnings fueled breakouts. But of course, we do have the backdrop of a market correction.
Yeah. And I wanted to mention this one during yesterday's show because it was earnings yesterday that fueled really an explosive breakout. This is a classic double bottom base here. The buy point was 1507, and really like the way VipShop traded today. This is a China-based online retailer. A lot of these China online retailers still have excellent fundamentals, good earnings and sales growth. This is a classic inside day that the stock showed today. So the fact that it was able to hold gains after a very bullish move Thursday is a positive sign. So just credit to VipShop for having a pretty good day of trading today.
Yeah, and flipping our attention to a name out of the enterprise software group, ServiceNow, which closed with a loss of about 3.6% today, but well off of its low close, it looks like it was able to find support around that 300 price level, but resistance now at the 50-day line, which until today it had been holding.
This is one thing I noticed in the MarketSmith Growth 250, which is a screen of top-rated growth stocks. And, a weak market eventually brings everything down with it. And headed into today, there were names like ServiceNow that were holding above their 50-day moving average. But you can see the stock finally broke support today. It managed a decent close up near its session high. But not only ServiceNow, but, we've mentioned names like Dynatrace and Datadog stocks that had been holding support. They were really hit hard. So some of the worst decliners in the MarketSmith Growth 250 today were the stocks that had been holding up the best. So again, a weak market eventually takes everything down with it. Atlassian was another big decliner today. That had been holding up pretty well. So.
But as you mentioned, this is now the time that we're going to see a lot of these stocks setting up in bases, and the strongest of which, of course, during this time will remain on our watch list. So we'll have to see how all of this shakes out when we do get that new uptrend and see which names will be in a position to be viable.
We've been talking a lot about just staying engaged when the market's in a correction, because it's a time when a lot of people stop paying attention and they're tired of seeing losses and tired of seeing stocks go down. But it's really the time to be, building a watch list of potential leaders, so that when the market does turn, you're ready with a list of stocks that are going to be actionable. So stay engaged, keep an eye on stocks that are acting well.
Definitely. And last but not least, let's check in on TLT. Now, this is an ETF that tracks the 20-year Treasury bond. Obviously, a huge move as of late. Today, this ETF tacking on more than 5% in heavy volume. So, of course, a lot of attention now to this space. But how would you advise handling a play like this?
Well, I think it's a timely ETF to talk about. I don't know that we've ever mentioned TLT on the Stock Market Today video, but I think it's kind of human nature when you see money flowing out of the stock market and into the bond market, and people hear about bond prices surging. They look for, how can I profit from this? But you want to be careful about buying bonds here, even though the yields continue to plunge. Because the TLT broke out last month, so it's very extended in price. You don't want to chase this ETF. It's probably the most liquid bond ETF, but just a caveat that even though money continues to flow into the bond market, it's very late in the game here, and this is a classic example of an ETF that is very extended in price. You don't want to chase it, so avoid the temptation to participate in this bond rally, even when stocks are going down, because this is way too extended to consider buying at this level. Yeah,
that's definitely why we're, even with ETFs, focusing on patterns can be so helpful. And even when it comes to different hedges, there's a time to do it and a time not to do it. And we are using all of our historical research to be able to guide these tactical decisions.
Yeah, I mean, when you look at a daily chart for TLT, the actual pivot was 146.09, and you can see it closed around 166, 167. So it's way past that 5% buy zone. So you're going to hear a lot of talk about buying bonds and the market acting weak and bonds going up, but you don't want to be buying stocks right now, and you really don't want to be buying bond ETFs either.
All right, well, we'll leave it at that, and of course the conversations will continue on IBD Live. That is our daily live stream each morning starting 10 minutes before the opening bell, running through the first hour plus of trading, where we are sharing our screens, providing you all of the context that you need about the current market environment, educational information, stocks that are setting up, a great chat function as well. Just so much, a great wealth of knowledge there for you, especially during this time.
Yeah, and remember we talked about VIP Shop yesterday as it was breaking up. It popped up early in the MarketSmith Growth 250 as one of the top percentage gainers. So, actionable stock ideas, and even more important, just analysis of the current market. And, when we do get that buy signal to start wading back into stocks, you'll definitely hear about it on IBD Live.
if you're on IBD Live, you really will be the first to know about that. All right, everyone. And in case you missed it, our latest episode of the Investing with IBD podcast is out now. We have a new show every Thursday, and this week's guest, Ross Gerber of Gerber Kawasaki, came in to share his insights and how he is looking at different plays that are potentially setting up in the wake of coronavirus, I guess ongoing coronavirus.
Yeah.
And last but not least, Ken, let's have you do this promo.
Oh, wow. Nailed it, failed it. This is going to be with Irusha Pires and Scott St. Clair. They're going to be talking about some of their winning trades. And listen, a lot of successful winning traders also make mistakes too. So nailed it, failed it. It's going to be very educational, talking about winners and some losers too.
Oh yeah, it's going to be a great learning experience, and you can sign up for that webinar now at investors.com/webinar. All right, that's it, everyone. We hope you have a fantastic weekend, of course, and we'll see you right back here next week.
Not that one.